Okay, it's with great honor that I introduce everyone listening. Larry, no, do not shake your head. It is with great honor that I'm introducing Larry Lepard to this podcast. If you don't know Larry, you're going to quickly understand why we all think so highly of Larry in here. And I was just explaining to Larry that, our business exists because we were trying to help local Canadians in the Greater Toronto area buy real estate. And in 2020, we went down the Bitcoin rabbit hole. So we were real estate and gold guys, Larry. Great financial crisis made me start buying gold, physical gold. No Mickey Mouse gold, Larry, physical. And gold miners. I'm going to save my gold mining history because it's like I'm trying to forget some of my gold mining stuff. Yeah, it's a tough business. Tough business. I've learned. But gold and gold miners and real estate. And then we jumped down the Bitcoin rabbit hole in 2020, haven't looked back, and we've mixed Bitcoin into like every conversation that we have now about protecting your purchasing power. And then Larry, you are really interesting to us because of your background. So I'd like to begin with those people who do not know who you are and your background. Could you just explain some of your background and don't avoid the Harvard stuff, mix in the Harvard stuff.
I'll make it brief because a lot of people probably heard this, but so I've been a professional investor my whole life, charged with kind of managing people's money. When I got out of business school, I wanted to be an investor. And I got into the technology area because this was early 1980s now, like 83, because I wanted to, I basically wanted to ride what I could see, or what I believed at the time was going to be kind of a wave of technology. The IBM PC was announced in 81, and you could just see that it was going to change the world, software, hardware, all that stuff. And so I always wanted to be a good investor. I kind of studied investing in school. And then I thought, well, you got to get a macro tailwind. Well, there was a really good macro tailwind in technology in the early 80s. And so it worked out really well. And so I was in the venture capital business really I started with a bank and then went to a private firm, then went to another private firm. And I did that from the early 80s all the way up until 2003, 4, 5 kind of time frame. And so I did, floppy disks and disk drives and graphic software and, Novell and all the,
Novell. Whoa, yeah, you're hardcore. That thing? You're hardcore.
Networks before the internet. All that. You name it, I was involved. So, and the PC clones and, Chips and Technologies and Dell and et cetera. So, anyway, and kind of my last great hurrah was, or the thing that really paid the most, I guess I should say, was I started doing the internet stuff in the 90s, or 93, 4. I was given a card with internet address, and I thought, gee, this is a pretty interesting idea. And so I went and I invested in everything private in the internet area I could, and that really worked out well because 93, 4 was kind of the launch, and Netscape came out, and Netcom, which I was involved with, went public. And so we had a really nice run from kind of the mid 90s up until the top of that bubble in 2000. And we managed to get out of a lot of it, not all of it. So the tail end of the fund got hurt a little bit, but for 5 years, we had really fabulous returns. And at the end of that, I kind of decided I wanted to retire and spend time with my kids and just manage money privately, not be a professional investor anymore. And a bunch of circumstances led to that. And we don't have to go into those. But anyway, so I'm hanging around investing my own money, and it's 2008 and the GFC happens. And I'm just like, oh my God. I was just blown away. I could see it coming, and I was short a lot of those tech stocks, but housing stocks. I could also, I was just shocked by what they did. I was shocked by QE. I was shocked by 0% interest rates. And I knew what it meant. It meant monetary debasement, and at an entirely different level. We'd never seen anything like this before. And I was in my 50s at the time, and I had a number, in the bank that I thought, well, this is good, and unless I live to be 110, I'm going to be okay with this number, and because I don't live crazy in terms of my needs. And then I suddenly realized, no, you're in trouble, because very much the way it happened to my father, who retired, in the 70s or 80s with a modest number, but by the time he passed, 20 years later, that number wasn't so big anymore because of inflation. I could see that inflation was going to eat away at what I had worked hard to save up. So I pivoted into what I call sound money investing. And, I thought, all right, let's study inflation. The last time there was really inflation was the 70s. Okay, so let's go study that. What did really well in the 70s? Well, the two top performing stock categories, I was a stock picker by trade, right? I was an analyst, financial analyst. I was picking private companies, public companies. That's what I did. I said, all right, let's go look and see where, what did well in the 70s, which is a very inflationary decade. And it turns out that oil and gold and silver mining stocks were the two top performing categories in the 70s by far. I mean, by like huge margin, 30% a year kind of compounded. And I thought about it for a while. I thought, oil, that's tough. It's kind of geopolitical, and it's got all kinds of, and I don't, I'm not from Texas. I don't understand it. And, it'd be too long a learning curve to learn the oil business. But then I thought, well, gold and silver mining, I think I understand what that is. I didn't really understand what it was, but I thought I might be able to learn it. So I teamed up with a guy in Boston who was a very good gold and silver stock picker. And I said, I'll put some money in your fund and you help me understand this business. And so I started to kind of grow a fund. And so my play on the monetary debasement that the Fed kicked off in 2008 was, I'm going to become good at picking gold and silver mining stocks. And I'm going to buy gold and silver as well, which I did. And at the time, it was a pretty good buy. I mean, it was in the $600-700 range. It's substantially higher than that now. So anyway, so that led me down the gold and silver mining road. And I've still got a foot in that camp. I've got a fund that I manage that picks gold and silver mining companies. It's a very tough business. But it's got a lot of upside optionality. When the right conditions are present, you can make a lot of money really quickly. But most of the time, the right conditions aren't present. I mean, I was just writing something for the book I'm working on, that when credit conditions are normal and the money's not being debased, Buffett's got it right. I mean, gold just is a dead rock that sits there and doesn't pay any interest or dividends. But when, the money is being debased very rapidly, it takes on an entirely different set of characteristics, which is it has no counterparty risk and it can't be diluted. And that becomes very important. And so anyway, I went down this gold and silver mining road, and then along the way, because I know we're going to get into it, as you might imagine, I kind of picked up Bitcoin. So I was always an Austrian economist, or had read all the Austrian economists and believed very strongly in sound money. I knew that since 71, we'd kind of gone down the wrong path. And intrinsically, I was kind of intrigued by the idea of a private form of digital money. And I'd followed a lot of them. I mean, eCash and DigiCash and, David Chaum's work. And, there was Nick Szabo did BitGold and all that kind of stuff. So, but none of them worked. I mean, they all kind of ran into problems. The government jumped on eCash, and none of them really worked. And so I was kind of like, well, when Bitcoin came out, I read it, the white paper, heard of it from the Ron Paul people I was familiar with. I didn't believe it. I was kind of like, yeah. We've heard this before. Sure, okay, another one. Is this really going to work? So I was a little slow. I mean, I wish I had been Max Kaiser and had believed and dove in and started buying it at $2 a coin. That would have been a pretty good thing to do. But I didn't think to do that. I know some people who did.
What was the moment? What was the moment that made you think, okay, there's something real here? Was there?
Well, when it went, it went from 2 to 10 or 20, and it was still kind of a joke. And the pizza transaction happened, and it was, that was still a very low number. That was actually before going to 20. I think when it got to about 100, there were several runs, and when it got to about $100 a coin, and then maybe when it went with the first run between 100 and 1,000, I'm trying to get my years right, but I think we're in the 2011, 12, 13-ish time frame. I was like, hang on a second. This has now been running, 2012, say it had been running for 4 years. It hasn't broken. It's going up in value. More people are using it. As you'll recall, in the early days to buy it, you had to literally, have a paper wallet and go meet somebody at a cafe and give them some money. And it all seemed kind of shady. And then along came, Silk Road and Mt. Gox. And I was lucky. I was in the process of filling out the money or the forms for Mt. Gox and about to send them money, and they failed. Although actually I wasn't lucky, because if you look back, even the people who were there just got back like 100 times their money on the small fraction that they recovered, because the price was so low in fiat terms. But anyway, I missed Mt. Gox. And then when Coinbase came public, suddenly you had a US-based company in California backed by a venture capital firm that would be a brokerage firm for Bitcoin. At that point, I thought, okay, this is easy. I'm going to do this. And so I opened a Coinbase account and I started buying Bitcoin.
Wow. Okay.
And that was 2013, 2013, I guess. That was about, okay. I remember my first purchase, I think, was around $300, something around there. So,
Our heads were down. Our heads were down building this business, like through that we were buying gold, buying some gold miners, and getting into the real estate world right until 2017. And then I was reading a lot of just, I guess, pundits, or I think they thought they were critical thinkers. Maybe I was buying into the fact that I thought they were, and they said Bitcoin's just this kind of tulip bubble, the whole story that you've heard before. And I remember looking in 2017 later, I guess it would be 2018, and I thought it would have gone to zero. That was my moment. Like I thought it would have gone to zero. And I remember checking the price randomly. I have no idea why. And I think it was like 6K. Yeah. And for me, I couldn't figure it out. I'm like, how did this thing go all the way to 17K? And then it's still at 6K? Like, why is it not zero? And that was one of the first moments. I still didn't act, by the way. I still didn't act. Okay. But that was one of the first moments where I was like, oh, there's something here that I'm not quite.
Might be something here, right? Yeah.
Yeah. And then I was busy with.
Yeah, I remember that 2017 ramp from a couple thousand to 17,000. I was buying like crazy. At that point in time, I really believed. And I got all the way in. Yeah, but I got punched in the face. I mean, I bought a bunch of them. And then, as you know, from that 17, it came back down to 9 and then 6. And then actually 3.5 was the low. And I bought some. I bought all the way down that. I bought a bunch of them at 9. I bought some more in the 3-4 range. And just kind of figuring, and I didn't honestly know. I mean, my concern, I've talked to Max about this, my concern was always the technology. I was afraid the technology might fail. I didn't, I didn't know what SHA-256, I was not smart enough, and I hadn't done enough, study of how well designed it is to get completely comfortable that it was going to continue to run flawlessly for 15 years. And I even got thrown off the scent I was in Boston. I went to some of the MIT Bitcoin forums. I met a couple of core developers. I said, how confident are you guys that this thing is going to work? And they said, well, sometimes we worry about it. I mean, they were pretty honest about it. They said, sometimes we make a change, and I think to myself, shit, I might have croaked the whole network. And I'm sitting there thinking to myself, well, okay, I can have some money in this thing, but I can't put big money into this thing because it's just not. And as you know, we went through block size wars. We went through, all the chains, the forks, et cetera. I mean, there were some back doors that got closed. I mean, it was technically riskier, back in those early days. I mean, I think a lot of that risk has been beaten out of it. And I now regard, the technology risk in it to be, quite low. But at the time, it didn't feel that way.
Larry, I have a question for you. With your background, how were you able to figure this stuff out? Where like somebody in our office was visiting here, there, and they follow your work quite closely. They asked me to ask you this specifically. How were you able to look at this stuff through the great financial crisis? You started looking at sound money, and then you looked at Bitcoin. And when so many people with similar backgrounds to yourself, who would be what I would call in traditional finance, didn't really make that transition, or not so obviously. What is it about your type of analysis that made you think that way? Was it your father's experience that you mentioned? Like, what was it?
Yeah, I don't know. I mean, Tom, I don't really know the answer to that. I mean, I've always been, willing to think outside of the box. I mean, I'm not, kind of a traditional thinker. And I don't know. I mean, I was kind of luckily situated. I mean, I got the sound money piece because of the gold background and the Austrian economics and I understood monetary debasement was a really big issue. I've understood that for 20 or 30 years. And I've been advocating for sound money for 20 or 30 years, right? So that piece I always had. And I would say, I went to Harvard Business School, and I would say most of my classmates there, they don't even know what the Austrian economists are. They never even consider it. I mean, they're just out there making as much fiat as they possibly can. And as far as they're concerned, the world's not broken. I mean, they're winning. I mean, they're having fun. I mean, I know people that, I think aren't that intellectually, curious or intelligent that have made oodles and, pounds, tons and tons of money just by playing the fiat game, And so I was always a little bit outside of the mainstream there. I mean, I had, before I went there, I had actually worked on Wall Street for 2 years, and that was an eye opener in terms of the ethics of kind of the stock and bond market. I mean, it was just, it's still a little bit of the Wild West. And so, I think the other piece, Tom, that helped me was I was a technology investor, and Bitcoin is really a technological innovation. And, everyone says, well, this cryptocurrency, there's all this arm waving. No. I mean, I think Saylor does a great job explaining it in some of his things, particularly the Atlas talk that he gave. I'd recommend people listen to. This is the invention of digital scarcity. And so you can, so digital scarcity, what do I mean? Verifiable digital scarcity never existed before. And, so just like the printing press didn't exist until they invented it, or the airplane, or electricity, or fire, or the wheel, I mean, whatever you want to call it, this is something new. And so, verifiable digital scarcity is going to change. Distributed verifiable digital scarcity is going to change the world, as far as I'm concerned. And so, and I was used to looking at how the world would change. I mean, that was kind of what I was trained in, right? When I was trying to find investments, I'm like, okay, well, this microprocessor thing, well, I heard about Moore's Law. I read about Moore's Law. I thought, gee, that's powerful. You mean to tell me these things get better every 2 years? They double their capacity? Oh my God, that's going to change the world, And so, I recall I was in the venture capital business, and, they were investing in the bigger, older companies, mainframes, and so forth. And, PC came out. I remember one of my bosses saying something along the lines of, what are you going to do with that thing? Who really needs it? It's just a glorified IBM Selectric. I mean, you can do word processing.
Yeah.
I was kind of like, dude, you're a venture capitalist. Come on. He was older, but it's like, give me a break. I mean, can't you see the potential here? I mean, it was amazing. I mean, I was in business school, and Mitch Kapoor came over, and he demoed something called Lotus 1-2-3, which most people won't know what that is.
Oh my God, I forgot about Lotus 1-2-3.
You remember? Yes. You do. I mean, you got to be old like us to know this shit, right? I mean, everyone who's using Excel today, Excel used to be Lotus 1-2-3. Okay, and Lotus 1-2-3 was the first spreadsheet, and he came into our classroom, and he put a thing up on the wall, and he said, look at this, I put these numbers in these squares, and then I hit the sum button, and they all add up. I was like, oh my God. I was just blown away. Like,
after using an old ledger, like a paper-based ledger.
I had just come off of 2 years on Wall Street. I had literally a green ledger tablet, and I would get these 10 Qs, which by the way, we had to pay a company called Disclosure a lot of money to FedEx to them. They would sit at the SEC in New York, in either New York or Washington, and take a picture of a 10Q, right? They would mimeograph it, and then they would, or photocopy it, and they would put it in a FedEx package, and they would send it to my office so that I would have those financials, right? I mean, because there was no internet, I couldn't get it, and I would pay them a lot for that service, and then I would take those numbers and I would spread them out on a green tablet. And, I would do a pro forma. Okay, we're going to merge company A with B. Is it going to be purchase accounting, or we're just going to consolidate the two? And I'd have a result. And then I'd go over to my statistical typist, this, a cheerful old lady from the Bronx with a heavy accent. She was a chain smoker. And she had this huge carriage that was like, literally 45 inches long. And she put a big white piece of paper in there, and she would type all these columns of numbers. And so the next thing you know, I'd have a spreadsheet that looked like an Excel spreadsheet, but it was literally kind of handwritten and then typed on this white piece of paper. Then I go upstairs to the print shop, where another old guy from Harlem would take a photo of it and reduce it down to an 8.5 and 11 page. And then I would I'd stay up all night, and I'd put those together into a blue book. And then I'd leave the blue book on the partner's desk, and he'd come get it in the morning, and he'd go hop on a Learjet and go to some CEO's headquarters and say, here's what your merger is going to look like. And that was Wall Street.
I feel like you're a walking history book.
I wasn't. It was a lot of interesting stuff. I sat next to Dennis Levine, who ended up going to jail. And he was talking almost hourly with Ivan Boesky, who also ended up going to jail. So it was quite an interesting time.
So with all this context and background that you have, what is it about gold? Like, gold hasn't been able to, in my opinion, keep the global financial system, the way it's structured today, honest.
No.
And Bitcoin seems like it may, I think we could separate it out. Like, is it a currency, or is it a neutral global asset of some sort? Is it both? Whatever. We can all argue about some of the details. But what is it about Bitcoin that you think offers the world that is different than gold? Is it, and maybe I don't want to lead you, but I'll throw this out there. Is it the decentralization of it? Like, what is the difference between Bitcoin and gold, and that is giving you some more hope or interest in it?
Yeah, so it's a great question, Tom, and there's a lot of different difference. But so they're both, what they both represent in my mind are neutral reserve assets that solve Triffin's dilemma. And Triffin's dilemma is the issue that the U.S. has the reserve currency, and therefore we had to print it and grow it, or else the world runs out of money. And so what they made a mistake at Bretton Woods. They should have picked the neutral reserve asset, which would have been gold. And gold is basically the old neutral reserve asset. It's analog sound money. Bitcoin is digital sound money. It's superior to it in every fashion because, and by the way, the reason that the gold standard failed for two reasons. One, politics and the law. We went off it. We're not even on it anymore. So, but two, they also created a ton of paper gold, and they were really good at doing that. And that's hours long discussion unto itself. But what Bitcoin offers is, and gold is heavy. It's hard to verify. There've been tungsten, bars plated with gold. I mean, it's got all these problems, so to speak. I mean, nobody even really knows who owns what. It's tough to verify. We haven't audited Fort Knox since the 50s. I mean, there's amongst conspiracy folks, and I'm sympathetic to it. There's some question as to whether we really have the gold we say we have. And so it's a problem. And, because it's hard to know who has what, you're kind of dealing with a ledger that you're not sure is honest. The thing about Bitcoin that makes it so different is that the ledger's out there for everybody to see, and it's triple entry. I mean, it's you and me doing a transaction, but it's also published, and everybody can see it. And so, it's easier to store. It's less costly. It's easily verifiable. You can move billions of dollars in minutes as opposed to, try and move $1 billion worth of gold. So in every way, shape, and form, it's superior to gold. And ultimately, it will supplant gold. It'll flip gold and become digital gold. I think it'll become the new Marere, as Safe has said. And so, now this is not overnight, right? This is over, decades. But we're on our way. And so they're really the same thing in the sense that they both are neutral reserve assets, and they both are neutral reserve currencies in the store of value sense. Neither one is really relevant today in the means of exchange sense. I mean, who pays for something with gold? Who walks in with a gold coin and says, "Oh, settle my debt here"? I mean, it just doesn't happen. That hasn't happened since 1920. Do you know what I mean? And
I think it's that specific point that has me somewhat interested right now, because I thought, okay, gold was a store of value. I do want Bitcoin to continue to evolve as a medium of exchange, because I think it's something Jeff Booth has brought up recently a few times, that it needs to be a medium of exchange.
Absolutely.
If it doesn't, it eventually can lose its store of value.
Well, I don't think it'll lose its store of value, but I think what Jeff has reacted to, and I was on with Spaces with him the other day, and I've had conversations with him about this. I think his concern is if we don't get it broadly adopted as a medium of exchange, we're much more vulnerable to a 6102 attack. And I'll define what that is. I mean, 6102 is the executive order whereby Roosevelt grabbed all the gold, in 1933. So, it's possible, and in a dystopian scenario, that the government, U.S. government, and others say, hey, this gold and Bitcoin stuff, they're ruining our currency. We're going to make it illegal. We're going to grab it. I mean, I don't think they're going to do this. The SEC approved it, but you never know. I mean, and we're going to grab it, and therefore, we're going to pay you out in cash, and you can't use it anymore. Now, like I say, there are a lot of us who will say, we'll give them the middle finger when they try and do that. But it is a threat. I mean, it is realistic, and governments are going to do anything they can, or I think are at risk of doing anything they can to preserve their privilege. Now, having said that, so I think Jeff's point is we got to get it out there so it's being so widely used as a means of exchange that how the hell are they going to grab it? Everybody's using it. You can't take it away. And so, but the critical piece there, in my view, is that you've got to get the Lightning Network really up and running on a full basis. And that's a tricky problem because there's not really enough money in the Lightning Network to develop, big channels. I mean, I could be wrong about this, but from what I can tell, Lightning Network's a little bit of a paradox because it's very, very low cost, but that means it's not very attractive for anybody to enter and put the resources into it to make it really work well. But, there are things like Fedimint and others that are coming, and I suspect ultimately there'll be private channels that will, for 10 basis points or something, say, look, we're going to guarantee that your Lightning payment gets there instantly on time, no problem, whatever it might be. But those are the kinds of things that are necessary to make it a means of exchange currency, because as you and I both know, on-chain transactions are getting more expensive over time, and someday will become prohibitively expensive for anything but, somebody who's moving, millions of dollars. I mean, if you want to move $1 million and it costs you $1,000 for an on-chain fee, who cares? But, today, and we're not even close to that today, but my point is, because of the limits on block size, the fees will go up. And because the block reward is going down, the fees will have to go up. I mean, at some point there will be no block reward and it'll be just an entirely fee driven, currency. But that's okay, because the layer above it can handle it. And that's really what's got to get built out, and it will. So.
I think it will. Just seeing things like the Aqua wallet now. I'm not sure if you're familiar with that particular.
Yeah, no, that's a great one.
I love that wallet because it integrates Lightning right into Bitcoin, and it even labels it as like you're spending money and your simple things, like the most simple thing kind of just changes your frame of reference. Okay, I just want to show you a chart. I think this was tweeted out by James Lavish a little while ago. I'm going to skip ahead. I'm going to come back to what I'm showing you here in a second. But this chart right here, I'm just interested in your opinion on it because and for anyone listening, James Lavish put out this tweet where he has a chart, looks like produced by the St. Louis Federal Reserve, where he has the US GDP line at the bottom and at the top. Sorry, Larry, I know it's not the biggest chart. I'm showing you.
No, I get it. That's federal debt. Yeah, US federal debt. Yep.
Federal debt is the line at the top, and it's the line. In summary, the federal debt line at the top is growing every decade at a steeper rate than the US GDP is. And if the US GDP is used to pay for the debt, if I look at this, just doing some basic math on this chart, it looks like it's like, $3 or so of debt is required to produce every dollar of GDP. When you see a chart like this, what goes through your mind for the next 10 years?
Well, yeah. So what this informs me, and I'm writing a book on this topic. What this informs me, this is an example of what I call Stein's law. Herbert Stein was an economist in the Nixon administration. He said, if something cannot go on forever, it will end. and this is a perfect example of it. I mean, this crocodile jaws. Either the debt is going to collapse, or we're going to have to inflate like crazy to get the GDP to close that gap. So one of those two events is going to occur, and in my opinion, is probably likely to be kind of a combination of both. That the debt will start to collapse in the sense that people will shun the debt, and maybe it won't even be money good. I mean, the U.S. federal government debt will probably be money good, but other debts may not be. And as that becomes the case, as we now know from multiple Fed chairmen and other people in our federal government, they are never going to let the U.S. default because they have a printing press and they can print the money necessary in order to, nominally meet the obligation. But there's a big emphasis on that word nominally because, if they're printing the money to meet the obligation, well, that's just one step removed from the banana republic and, republics. And, we know how those tend to end. I mean, Argentina and Venezuela are a couple of good examples where hyperinflation has taken place. And if you want to go back further, there's a case of it in Germany and the Weimar Republic and so forth. So, to me, what's going to happen is we are headed toward a major debt crisis. I mean, we're, as Lynn Alden points out, we're in fiscal dominance right now. There's no will in Washington, D.C. to solve the problem. There's no discussion of cutting expenses or spending. They literally have to continue to inflate and debase the currency to keep the system running. They could stop debasing the currency and the system will collapse, but that looks like 1929. That looks like a stock market falling and the value of everything falling. And they've made it pretty clear they're not going to do that. I mean, Bernanke set us on this path when he gave that speech back in 2002, deflation, making sure it doesn't happen here. And he says, the U.S. government is blessed with a technology called a printing press. And therefore, I believe that we can print whatever money is necessary, we're not going to have deflation because to the degree that debt collapses and creates deflation, we can print to prevent that. And debt is inherently deflationary. You take on debt and you're spending, you're bringing future consumption into the present, but in theory, you'd have to pay it back in the future, which is a deflationary event. And, it's a classic example of just, children wanting to have their cake and eat it too. And that's really what the whole Keynesian school is all about. I mean, it's a bunch of children who, basically think there's a free lunch.
Yeah, agreed.
They're just wrong. I mean, they're fundamentally wrong. And as our friend, as you're my good friend, and wonderful guy, Greg Foss says, it's just math. I mean, this isn't really an opinion as much as it's just a mathematical fact. Oh, here's a good one. Yeah, look at this.
Yeah, so Lou Groman will share this one quite often, which I kind of like. This is U.S. deficits, and they kind of you can see great, great financial crisis where it goes, then the pandemic where how big the deficit gets, and where it's sitting right now. So, do you think when you look at this chart, like the next emergency crisis that comes up, do we just run deficits in the U.S. that are they're larger than the pandemic? Like that's just where we're headed mathematically?
Yeah, I think that's right. I mean, we're running about a 6% deficit right now, 6% of GDP. And, in theory, we've got a healthy economy. I mean, there's an argument that it's not beneath the surface, but, and if you look at the 2008 downturn or the 2000 downturn, in both of those cases, you can see on the chart, debt to GDP went up substantially. As a percentage. I mean, it looks like the 2000 case, it moved, moved at least, 3 or 4 points. And in the 2008 case, it moved, much more than that. So, I mean, and the next downturn, this is going to get a lot larger. And this is, James, as you pointed out in the prior chart, James Lavish said, this is what we call a death spiral. I mean, one of the charts you don't have, but I think everyone should consider or look at is, go to the Fred site and look at the U.S. federal interest expense. I mean, it's just balloons straight up. And so, the federal interest expense gets larger. That makes the deficit larger, which means we got to sell more bonds to cover the deficit, which means the debt gets larger. And then we pay more interest on the new larger debt figure. And then people begin to not trust the bonds that they're going to get paid back, so they demand higher rates of interest. And I mean, you can kind of see where this is going, right? This is a complete, debt, death, doom loop is what it's been labeled, and that's correct. And now there's a solution to that, and the Fed knows what it is, and we know what it is, and that is, the Fed starts buying its own bonds, and it says, okay, well, we got to issue these bonds, but we'll buy them. That's just another way of saying they're going to print the money. They're going to, to the degree that, okay, fine. We're running, our debt is collapsing and interest rates are going higher, but we can't have that. We'll just go in there and we'll bid for our bonds. Well, what money are you going to use to bid for it with? Well, new money that we printed. And so the money supply will grow, enormously. And you can see that. I mean, you saw that in COVID. M2 and COVID went up, 40+% in a 2-year time frame. I mean, it's hilarious. Elizabeth Warren recently tweeted that it was the greedy corporations that were causing the inflation with all their price gouging. And I mean, that's just she's either stupid or lying or both, because that's not the case. I mean, the greedy corporations have always existed, and I don't think they're particularly greedy. They're just business people. But what's going on is that, the huge record-breaking increase in the money supply and that occurred during the COVID event is what led to the inflation. So, and by the way, Tom, I think the next one is going to be bigger. And that's one of the things you've seen. They've gotten closer together and they've gotten larger. We kind of had one in 2000. Okay, they cut rates. They got the housing bubble going. We had one in 2008. Nope, new stuff. They're QE, printing money, ZIRP interest rates. Okay, fine. But they kind of got a recovery going up. The repo blowout in 2019, back to QE, then COVID. I mean, it took Bernanke, from 08 to, 11 or 12 to print $3 trillion worth of money. I mean, in COVID, Powell printed $3 trillion in, 6 months. I mean, and so the Fed balance sheet's now $7 trillion. I think it's going to 25. And, what's going to get unleashed here is just horrific inflation. And the mistake that I think a lot of people are still making is they haven't picked up on this, because we did have a 40-year deflationary trend from the early 80s until 2020. I mean, peak deflation, in my view, was March of 2020. A lot of reasons for that. The opening up of China and a lot of cheap labor and manufacturing capability drove deflation, and technology drove it too. But, now with the monetary situation that we've got going on, inflation is going to be a part of our lives. It's going to become a bigger part of our lives. I mean, the mainstream narrative is that they're going to land the plane, inflation is licked, we're going to be back down at 2 or 3%, and party on, buy stocks. And I think that's wrong. I don't think that's what's
That's interesting what you said. I never really kind of thought about it with so much clarity until you said it, that like there was inflation going the last 20, 30 years, but because so much manufacturing was like offshore to cheaper places, the loss of purchasing power of the dollar could kind of be hidden because the products were being created much more cheaply because the labor was being replaced with a cheaper labor, bringing those products. It looks like everyone's standard of living is okay, but meanwhile, your purchasing power of the dollar was getting eroded the whole time.
Very clearly, and the other place where you saw it is the inflation post 2008. And this is where I got fooled. The inflation went into the assets, not necessarily into the things that you needed every day, because they managed to sterilize it by taking the reserve requirement.
Well, it was, it was much more obvious in a place like Canada, where real estate is such a bigger component of our GDP than the US, because in Canada, the new money comes into the system. We all know it's a debt-based system. New money comes into the system through real estate quite easily, because when you put pen to paper and you sign the mortgage, you're creating new money. So it hits the real estate market here. And because that's a bigger part of our GDP than the US, it was kind of obvious to a lot of us here, like, holy shit, like it's all just hitting these real estate prices. This is like debasement of the currency more than it is these real estate, the value, the shingles and the lumber and the brick.
Value, your currency was getting devalued against the houses. Yeah, that's right.
And it looked obvious, but looking back, maybe it should have been even more obvious to a lot of us. But and then I guess just going forward, when you know some of this stuff, I always wonder, I'm like, where do we get to like this social unrest movement in 10 years? Like, where does this lead? Because as it gets bigger and bigger, I don't understand how this transitions. Like, thank God for Bitcoin, obviously, but I'm not sure how this transitions over the next 10 years.
Yeah. So I think that what's going to happen, my belief is that, that we've passed the event horizon. As Lynn says, nothing stops this train. The next print's going to be even bigger. More and more people are going to come to realize what we've come to realize. And a mass version of Gresham's law is going to take over, where Bitcoin and gold are going to go to prices that are unimaginable today. The cost of living is going to go to prices that are unimaginable today. A lot of people are going to get squeezed, which is terribly sad. And there's going to be a political revolt, and somebody like a Robert F. Kennedy or somebody else, or a Ron Paul type, but there'll be a new one to emerge, is going to stand up and say, guys,
enough.
Enough. The problem here is the money is broken. We have absolutely got to return before we go full hyperinflation. And it's possible we'll go full hyperinflation before the political will emerges, but we've got to solve this problem by going to a sound money some sort of a sound money. I'm writing a book actually on this topic, and I've got a policy prescription in there for how to address this. And I'm hoping that this book actually gets read and some people listen to it, and that as the events play out, people come to realize that the fundamental problem here, this and I know this, and this is why the Bitcoiners say it, is fix the money, fix the world. I mean, the money's what's broken, right? I mean, the Keynesian machine has had a very good run. I have a friend in the space who says, the end of the great Keynesian experiment is near. Plan accordingly. And it really is true. I mean, Keynes told us we could have a free lunch. And, for quite some time, we've had a free lunch. I mean, it hasn't been free because we paid for it with inflation. But there's something, Jens Parson, I wrote this in the book, says that, the law of inflation, it's like drinking, or drugs, you got to keep doing more to get the same high. Do you know what I mean? And it just kind of compounds on itself. And that's really the problem. And
Larry, when's the book coming? When is the book coming out? When's the target?
I'm working hard. The goal is the year end, but and I hope to make it. But it will be year end. At worst case, it'll slip a little beyond year end. But it's written, but I'm editing it and making it better. And I'm trying to balance quality as against. I want the message to get out there sooner rather than later. So. I think probably wherever it is at year end, that'll probably be it. I'll ship it.
Does anyone in your past life that is somehow tied to corporate treasury of some sort? We all know the Michael Saylor story, but do you see any discussions at a corporate treasury level of any public companies talking about adding big?
I really don't. I don't run in those circles.
Yeah.
I don't have any context there. I mean, I'm probably, most of my business school classmates probably think I'm a freak.
Yeah. Well, that means you're probably doing something right.
I don't know about that. When I go to reunions, they're all kind of like, "Oh, it's what a shame. Have you heard what happened to that guy? He became a sound money guy." They're all. I mean, it's crazy. It's
crazy because I have similar experiences where I can't get people to they'll complain about the problems in their own lives, about planning for retirement, and then complain about their kids not having enough money from the jobs to pay for rent or housing or food, and then can't connect the dots back to the money is the problem. Like it just sometimes feels like you're talking to a wall, right?
Yeah. No, it's subtle and it's confusing, and that's why, again, on the book, I'm really trying to explain. I want this book. This book's not going to be as good as the other books out there. I mean, if I look at, like Lynn's book or Jeff's book or Safe's book, they're all much better than my book. But I think where I'm going to fit is that I'm going to try to explain it in very clear and everyday terms. And I'm going to try and have it so that, you could know nothing about finance and read this and go, oh, I get it. This is why I'm getting screwed, and this is what I got to do.
Larry, I just want to tell you something on this point. Just when you're writing this book, the amount of people that told me they're so excited to hear you speak is because you present things very clearly in a way that is your own. So just know that this book, it is going to find a place.
I mean, hopefully it'll be good. I'm terrified.
It's going to be great. I'm not even going to listen to it.
It'll be me. I'll tell you that. It'll be genuine. It's very genuine. It's got a lot of Larryisms in it. My wife has got me on a no F-bomb rule. So I've been trying to be very well behaved, and obviously the book will be clean. But
oh shit,
that's quite hard.
Yeah.
I like hanging out with Foss and dropping down.
I like it when you two are hanging out. I like it when you're
right? It's a lot of fun.
I'm going to put this up. So Michael Saylor put this. I'm sure you've seen this. I wish I could get.
This is in the book. This is a fabulous book.
Oh, okay. And I wish I could give credit to who put this together, because I know it's somebody
Jesse
on Twitter.
Myers from Croesus BTC.
Thank you.
He's on Bitcoin. This is a new one because he's got the gold number updated. Wow, that's nice.
Okay, so then Saylor has this in one of his presentations recently that he gave, and then he said, okay, in 21 years or so, by the year 2045, here's how it looks. And everything's grown at different paces. Bonds, are higher nominally, but grew at a slower pace than, for example, real estate and equities. But then you see Bitcoin that went from 1 trillion or so to 280. And I think when I look at this gives me such incredible hope for everyone. How, to you, when you see this, is this absolutely ridiculous to you, or is this in the realm of possibility?
This makes total sense to me. Have you done going backwards? So that would be at 280. So that would be 280 times today's price. So I'm just trying to figure out.
I think he has the appreciation rate in here of like an average rate.
Let's say Bitcoin's at 68 right now. 280. So that'd be one Bitcoin would be worth $19 million. Wow, that works.
Yeah. Doesn't it sound ridiculous to say that?
No, well, look.
No, I know. I'm with you. I just mean
it doesn't. I mean, I mean, it's not really. I mean, it's not really that one Bitcoin's worth $19 million. It's that in that world, gasoline would probably be $1,000 a gallon. Do you know what I'm saying? I mean, this is really, and that's where it gets weird here, because you're talking about one currency, measuring it in terms of another currency, and the currency that you're using to measure in terms of is a piece of shit currency that's failing, the dollar, right? And so we'll all have to get used to thinking of things in different terms. I mean, I'm sure you've seen the meme on Twitter that shows the number of Bitcoins it took to buy the average house. And the dollar price of the average house is going up every year, and it has for the last 4 years. But the number of Bitcoin it took to buy that house is going down every year, right? And that's...
There's something else that you said earlier that just makes me think this comes true as well. You mentioned Novell Networks. I used to work at Oracle in tech support, and in Oracle tech support, there was a couple guys who supported Novell Networks, but everyone else was on TCP/IP. And TCP/IP was just kind of like taking over, and there was this like one guy left who just understood Novell. And TCP/IP, because I think for a while Apple had its own network protocol. I forget what it's called, Apple Talk or something. I forget.
Yeah, I remember when they tried that. Yeah.
Okay, and then like eventually TCP/IP just engulfed everything, and that guy that was supporting Novell just kind of like went away as well. And when I see everything in the world now, I'm like, oh my gosh, it's all playing out again. Like there's Bitcoin, and I know we've all used the TCP/IP example, but I'm like, I've seen this pattern. And then on another level, I remember when Amazon was just selling books and they started to sell other things, and people would tell me, I will never buy a pair of pants or socks or shoes from Amazon because I need to try them on. You'll never see me do that. And now people are buying like couches and mattresses and stuff. Yeah. And it's like you see these patterns, and then you have the same reaction back from people. And even though I put up that chart where it looks like you and I are in agreement that Bitcoin might evolve to like this asset that grows quite nicely over the next 20 years, most people can't see it. And that's where I get so kind of confused. I'm like, I don't understand why you can't see this. And I understand everyone has to come at it from a different place and takes their own time. And I didn't see it at one point, but it does get frustrating sometimes.
It does. No, I agree with the frustration, but what you're describing is pattern recognition, and it's very important. And you're also describing something, and I talk about this a little bit in the book too, that there's really a change here in the investment world. I mean, I was brought up, looking at price to earnings ratios and the growth of businesses and more kind of value investing and traditional investing. And something happened with technology that really didn't exist very much before. It kind of did, but not in the same scale. And that is we got into quote unquote networking businesses. And so Metcalfe's law came into play. And the only thing that was close to this in the past were maybe networks like the TV and radio networks or things that were a network like the Yellow Pages, where the kind of things where they all consolidate down to one and everyone uses it. And because they use it, then you got to advertise there and, that sort of a thing. Those are very, very valuable businesses. And in the book, I show this. I mean, some of these, there aren't many investments in the world that have returned, 2,000 times their initial cost in less than 25 years. And yet there are businesses like that in the networking business. Amazon is one, Facebook is another one, Google is another one. I mean, and so when you have a business or a thing that's a network where the value and the Metcalfe's law applies, the value grows at the square of the number of users. And, look, who's going to use another search engine other than Google? I mean, everyone goes to Google and everyone uses Google, and therefore people join Google, and it becomes a flywheel that you cannot stop. And that's what's going to happen with Bitcoin. It is a network, and its value grows with every additional user, with every additional transaction, and it becomes more and more the numeraire. And so, yeah, as you point out, you and I can see it and believe in it, and I think others are coming to see it. And look, it's very encouraging. I mean, you've got TradFi guys who had every reason to hate it, like, Larry Fink, who I don't particularly like. But, he obviously did the mental calculation and said, holy shit, this thing's going to win. I either got to jump on board and support it, or I'm going to look like a fool, and even though it's anti-fiat, I'm going to jump on and support it. Now, on the flip of that, you got guys like Jamie Dimon who hate it, or Warren Buffett who hate it, people are getting it. I mean, I was very encouraged. I watched yesterday Paul Tudor Jones, or maybe it was the day before, recently, Paul Tudor Jones on, CNBC, and he just said, look, inflation is baked in the cake and all I own is gold and Bitcoin. I thought Andrew Ross Sorkin's head was going to explode. I mean, it was fabulous. It's just like, because Tudor Jones is no fool, right? I mean, he's a very, very successful investor. So, look, it's to me. I was just advising one of my clients this morning, one of our investors, and he said, I've come into some more money. What do I do with it? We reviewed his weighting by all the categories. I said, I'm hard pressed to tell you shouldn't have more Bitcoin. Look, it's volatile for sure. And to have 100% Bitcoin, some people do it. If you're young, you want to do that, great. This gentleman's older, much older. And, 100% would not be appropriate because of the volatility and the drawdowns. But, he had a fairly modest weighting. And I thought, you could definitely add to that. And you got plenty of other things. And you can handle this volatility. So
I got something else I want to throw at you here. A few more questions really quickly. GDP, if the characteristics of GDP or the factors that would influence GDP would be population growth, productivity and capital or debt growth, however we want to define some of the main things. If I look at productivity, if in the Western world, if I don't see population growing, like it did during the baby boom generation, that really, in that era, if you increase the population and increase productivity, all the productivity gains are getting kind of eaten up by that population gain, and it's really good for GDP.
Yep.
In today's world, when I don't see that population growth and I see the productivity gains that artificial intelligence is going to bring to a whole other category of the economy, it feels to me the last factor that influences GDP, debt, or capital growth, debt, however you want to call it, AI, if it pulls down as a productivity enhancer and makes things cheaper, to me, the amount of debt that we see going forward to get the GDP number continuing to increase is going to increase at an exponential rate to balance out the exponential rate of.
Yeah, and that's why the system's going to blow up, Tom. I mean, what you've just described is why the system is going.
And it's not me. That's me taking stuff again from Lynn and Jeff Booth and
that's Jeff's point. You can't run a system that needs continual growth and inflation on a highly deflationary world that's getting ever more deflationary with things like AI. And I mean, the first thing we got to get off the notion that growth is a good thing. I mean, that's not really, right? I mean, the Keynesians all are like, all we need is growth. Well, in a limited resource world, I mean, growth isn't a good thing. I mean, I'll give you, an example. There was an island up off Alaska where we put, reindeer out there in order to feed the people. We had troops there during World War II, and the troops were there to watch Russia, and we put reindeer on there, so that the troops would have something to eat in case the weather was bad and they couldn't get their food shipment. Well, eventually, and the reindeer ate the lichen that was on the rocks. And they originally put a few reindeer out there and there was no problem. And then, of course, the reindeer herd grew 10x. And then eventually there wasn't enough lichen to surprise them. And then it went to zero. They literally all died and starved. So unlimited growth in a fixed resource world, it doesn't work.
Especially growth as we measure it today, like as the GDP measurement today, it doesn't make sense.
It doesn't count. So what's, efficiency. I mean, what we want, human well-being is driven by efficiency. I mean, when fossil fuels replaced whale oil, and when natural gas replaced, oil, and then now nuclear will ultimately replace the fossil fuels. I mean, this creates more efficiency, more energy per unit of input, and that's what we need. Without efficiency, we don't increase our standard of living, and we want to increase our standard of living. That's how one generation lives better than the prior generations. And so it is, as you say, it's all about efficiency. And yes, AI and deflation, all the things that you're talking about are what increase that efficiency. And that's what we should be aiming for. And these Keynesians are they're morons.
I'll say, because you're being nice now. Your wife said you have to be nice, so I'm going to take the role. They're morons.
They are. That's pretty much right. And but they bought the economics profession. They bought the press. They bought everybody. I mean, and if I'm just, as I write the book, I'm going back and I'm reviewing some of Ron Paul's testimony in front of Congress. I mean, Bernanke was belittling him, and it's disgusting.
Yes.
It's absolutely disgusting the way these Keynesians think they've got it right, and they don't. They're dead ass wrong. So, the beautiful thing is it's not necessarily going to end well for them. And let me just offer a book recommendation. I don't know if you've read it yet, but have you read The Mandibles yet?
I love it.
Yes. Yeah, right?
Yeah. Yeah.
Didn't end well for Lowell.
No.
The Keynesian economics professor at Georgetown. I mean, look, a dystopian
and book. Imagine that book had Bitcoin in it. I don't want to ruin anything, but just imagine the difference of how.
Matt Odell ran a seminar with her, and a lot of people donated Bitcoin. I think she's a Bitcoiner. She just doesn't know it yet. Mm-hmm. In fact, I like to say that about a lot of people. There are a lot of people who are Bitcoiners. They don't know it yet.
For sure.
They understand that fiat's broken. Most of the gold people are all Bitcoiners. They just don't know it yet. And so I'm trying to convince them. I think I'm going to get most of them. I've given up on Peter Schiff. But I think I got the rest of them.
I have some rapid fire questions. You have a few more minutes. I want to slip in some rapid fire.
As much time as you like. Yeah.
Okay. So this one, I know you're not going to like the question, but I can't resist. The Bitcoin price high during this next bull run. Just no one's holding you to this. No one's holding you to this.
This is just a wild ass guess, guys. I mean, I have no clue, but based on pattern recognition and what it's done before, I anticipate we're going to see between 180 and 300 as a peak on this next run. And I anticipate, I'll go further. I'll anticipate.
Because a lot of people are saying 180, like, a lot of the sentiment is 180 top, no more than 180.
Yeah, I mean, I think Fred's power law is actually pretty accurate and fairly powerful. And if you kind of get a 2 to 2.5, 3 standard deviation move, you get there. I think 150 is in the bag easily. I think that, I think, so gold is telling you Bitcoin's about to run hard because gold always moves first. And so we're days, weeks, months away from breaking through 73 and squirting up into the low hundreds quickly, in my opinion, on Bitcoin. And then as things get going, it'll go further. The piece that I can't predict is when the quote unquote big print is going to come. I mean, the big print is coming. It's definitely coming. I just don't know when. And that's because it has to do with when the problems get serious enough that the Fed stops the small QT that they're doing, and they took it from 60 down to 25. And when they take interest rates down more aggressively, and by the way, I'm the opposite side of the CME. I think they're going to continue to drop rates pretty quickly. I think the bond market is telling them they have to, and also their interest expense is telling them they have to because they're in fiscal dominance. So.
You see what Canada's doing, right? We dropped half a point, and now another half. There's word of another half point before the year's out.
Yeah, I tweeted that out. Cowbell in Canada, eh?
Yeah. We're leading the way in something. Hey, we can debase better than. There's something we can beat the Americans in. We can debase better than you can. How about that?
Well, I don't know.
How about that?
We're going to give you a run. We're going to give you a run for your money.
I think you know what? I'll take you up on that. I think we can do it better than you. Let's see.
Okay,
Let's see. Okay. Next question. 2035. Is there a sovereign accepted neutral reserve settlement asset? 2035. Is there a new 2035? Is there a new sovereigns accepting a new neutral reserve asset in 2035?
So I think we're moving into a world where there are going to be a lot of currencies. If we have complete dollar fiat failure, we might have one currency, and it might be either gold or Bitcoin. Gold would be the wrong choice, but we'd ultimately evolve to Bitcoin. But my working model is, we're already evolving toward gold as a neutral reserve asset. 25% of the oil trading today is done outside of the dollar. That's new. Used to be about 95% the dollar. These countries are settling with each other in their own currencies. So, rupees and rubles and yuan, they're all trading gold in those currencies and then net settling, they're all trading oil in those currencies, net settling in gold. And that's a trend that's accelerating rapidly since the U.S. grabbed Russia's reserve. Yes, to answer your question, 2035, yes. I think there'll be probably two competing neutral reserve assets, gold and Bitcoin, with gold on the way out and Bitcoin on the way up. And I think the dollar will be a transaction medium, if not gone, by 2035. I kind of place the end of this whole experiment at the 2030, 2031 or 2 area. If you kind of look at fourth turnings, this fourth turning is clearly about what is money. I give Robert Breedlove credit for that, coming up with that notion. And we're going to decide what money really is. And money was the PhD standard since the Fed has been created, and that's about to die. The PhD standard ain't going to work anymore. And so money is going to become, for a while, gold and Bitcoin will coexist. And then eventually Bitcoin, I think, will supplant gold. That's kind of how I see it. And, these fourth turnings tend to last 25 odd years. And so if you kind of consider 08 to be the beginning and do the math, you're in the later this decade, early next decade. So,
right. So the next few years are really going to be fun.
Oh, yeah. It's rather sad. And that's why. Look, I'm not trying to be a doom and gloomer because I think the world is.
No, I think you're being real.
Yeah, I kind of operate on the Boy Scout mind, like be prepared, and I'm writing the book too, and I'm saying, look, the book's not doom and gloom. There's some really bright and positive things happening here. Technology is going to save us. It really is. But the transition is going to be tough, and there's going to be a big difference in the outcomes between those people who get this stuff and those who don't. And so, obviously, I want to put the book out there to help more people, quote unquote, get the stuff, right? And that's the objective. Yeah.
Okay. What is history going to say of Michael Saylor?
I think they're going to say he's brilliant, and I think he's going to be a historical, world-changing figure. My personal view is that he's married to principles and a cause. That's why he doesn't have a wife and kids. He's probably one of the highest functioning humans I've ever seen in terms of intelligence and knowledge base. And I think he's probably going to end up the richest man in the world. I think he's going to run for president ultimately. My sense is that he's preparing himself. He's about the right age. He's preparing himself to step in. In when all of this comes to a head. I think he's preparing himself to step in and restore America and American values based upon sound money, which will be Bitcoin. And so that's kind of how I see it playing out. Now, I don't know. He could not be doing that, but he doesn't intend to give it all away. He said he's going to just, let his keys expire with him. He's got 17,000 coins, so he's quite wealthy. I think he's on a mission. I think he's on a mission to prove that this is the best form of money out there and that this will solve the country's problems. And I think he's going to be successful at it.
Next question, wall balls or kettlebell swings?
Wall balls. Yeah, much easier. I did wall balls this morning. Do you see my workout this morning?
I did see your workout this morning. Yeah. You got to tell everyone, for those people who don't know, I actually got the opportunity. I was down visiting a friend in Naples, and I think it was Foss who said that you were going to go to this CrossFit gym, and I went there, and it was like 1,000,000 degrees as a Canadian in that heat down there, and you're out there running and bench press.
Yeah, but you kicked my ass. I mean, you're younger than me.
No, if I did, it was like a millisecond. It was like nothing.
No. It was probably it was multiple minutes, a large number of minutes. But we both did. That was a brutal workout.
That was a brutal workout. One of my friends who drove me there because I didn't have a car. I was traveling. Yeah. He was smoking a butt outside. I don't know if you don't remember. I remember.
Yeah, I remember.
Yeah, get in here. What are you doing?
You look like shit, right? Yeah.
Hey, what is driving you to do? Like you told me, but I just want everyone to hear this. What is driving you to do this madness? Because you're running, you're doing squats, you're doing thrusters. You're what's going on? This has been an existential journey for me. Fighting the fiat masters for 30 odd years, and in 2015, I thought they had me beat. And right around that time, that was when I started getting into CrossFit because I realized if I wanted to beat them, which I do, I mean, I want to see Ben Bernanke disgraced. I want to see him in the history books right aside John Law as one of the greatest counterfeiters ever. I realized I had to be around to get to see the outcome, and I realized I was fat and lazy, and so I started researching how to get really fit. And that's how I found CrossFit, and then I jumped into it, and then slowly but surely I've got myself. And I'm 67. I'm probably fitter than I was in my 30s and 40s when I wasn't doing much. So, but I was blown away watching you do it. Just watch the nervous. Don't push the nervous system too hard. Don't push the nervous system.
I don't. Trust me. And you can get injured. I mean, you got to be really smart about this. And I go 75, 80%. I don't go 100% very often. And look, the bottom line is I want to be here to see this better world that we're all working towards. I think it's going to be a shitty, there's going to be some rough stuff in this transition, but I think we will get through it. And the first turning is generally a very wonderful time when there's a lot of hope. And there are a lot of things in the world to be hopeful for. I mean, one of the great things, we talked about technology is going to save us. I mean, it's not just Bitcoin. Bitcoin will save us. It'll be sound money, but the internet's going to save us. I mean, look at the way that a Joe Rogan and a Tucker Carlson and other people are breaking down the traditional establishment bullshit narrative. You know what I mean? And look at the way that we can do podcasts like this, and people who tell the truth can get on and spread the truth to other people. And, look, people understand. I mean, you can't piss on their leg and say it's raining. I mean, people get it. And so this technology is, in my view, going to save us, because it's going to take us back to a more truth-based system. And these big, sclerotic, corrupt organizations like the media and big pharma and big military, all this, it's all going to fall away because there's nobody in their right mind that wants to be a part of that or to support it. And so, so there's in my view, there's a very positive message here through all this transition, but it's likely to be somewhat of a difficult transition because, financial events are financial changes are tumultuous, so.
Larry, I just want to say something. Like what you are doing with your background, all the way from your education to your early life in finance to your kind of transition 2008 to looking at sound money to now understanding Bitcoin and sharing this message. Because of your background, what you are doing is you're giving a lot of people new to this certainty and some confidence that they didn't have before because they look at you and respect you.
Well, I appreciate that.
And it helps them get over some of their own hurdles. So you're bringing a lot to the table that you maybe don't understand that you are.
Well, I appreciate that. Thank you. Look, I like to say I'm just a squirrel looking for a nut. Tom, I'm not as fit as you say. I'm not as smart as you say. I'm not as good as you. I got plenty of flaws. In fact, we should get my wife on here.
We get both our wives on here. They'll be on there forever.
Get my wife on here, and you get a much more balanced perspective of all the bullshit that I'm a part of. Okay, so, but I will say this: I do feel, and the book will lay this out pretty clearly. I do feel that sound money is a really important moral thing that the country has got to return to, and countries, the world, really, because and that think of how good the United States and the Western world was at the end of World War II. Do you know what I mean? Think how productive. Hell, there was obviously a Cold War. Russia was a problem. The bomb was a problem. Okay, fine, but in general, it was a good world. And I remember, I had some of that growing up in the 60s and 70s, and I can tell you, this is the world I'm in today. It's not like when I grew up. And that's part of why I wrote the book. It really bothers me and distresses me. And so, we can get back to that. And we did all that on the gold standard, by the way. We had sound money. And the problem started, the problem started in 1913, but they got much more serious in 71. And they've gotten even more serious after 08. And they got more serious. They're getting more and more serious. We got to solve this problem. And, thankfully we will. Thank God for Bitcoin. Thank God for Satoshi. Thank God this thing came along. In my view, it's almost divinely given to us, and it will save us, in my opinion. So, that and the microprocessor. I think, thank God for, Shockley and Fairchild and Intel and all the guys who gave us the ability to do all this. As bad as the world is in a lot of ways, here you and I are talking, we're thousands of miles apart. Mm-hmm. We're talking real time. We're recording it. We can broadcast it out to thousands. This is amazing. It's absolutely amazing. I remember, at business school, we were talking about maybe someday there would be digital commerce on these computers, but we had no clue, no clue. Right. So,
and the next iteration of this, we didn't talk about this today, but if you just think about your ideas of microprocessing, cryptography, if we look at where something like Bitcoin mining gets introduced into energy and tech companies buying nuclear power plants and hooking up miners that might use up the extra capacity and the amount of energy that's going to come online because of Bitcoin mining as a second order effect of some of these, like Bitcoin miners are going to encourage energy abundance. And I don't know if we get there in my lifetime or not, but I feel like it's now I never envisioned energy abundance as a possibility.
Oh, absolutely. Troy Cross wrote some stuff and I put it in the book, and it's fabulous what's going on there. Look, the world does not have to be the way it is today. It does not. It can be much, much, much better. And that's what we got to sell. We can't be selling the gloom and doom of the Keynesian thing, but that's all real. That's still there. We got to shed that. Mm-hmm. But the carrot is this is going to get a lot better, folks, when we get to the other side of it. We just got to get there.
Yeah.
Jeff said to me the other day, he said, "Look, Larry, if everybody started using Bitcoin for everything, we could shut their system down really fast." He's right. Mm-hmm. But the problem is, it takes time. I had a cab driver the other day, and I orange pilled him. But he had no clue. He said, "Oh yeah, I've heard some stuff about that. That crypto shit, it's fraud, right?" I said, "Yeah, Sam Bankman-Fried was a fraudster, but not Bitcoin." Mm-hmm. And by the time we were done, he had a Mun wallet, and I'd send him some coins, and not coins, but I'd send him some sats. And You know, so
if you're sending full coins, send them over here. Okay.
No,
if you're sending full coins, no.
I did not give my cab driver full coins. But I did give him some sats on his money wallet, and he was kind of shocked. He was like, "Holy Christ, that's a nice tip." I mean, it was like $10, but
Yeah, cool.
But it was a long ride. So anyway, I don't know.
Larry, where can you're on to, where would you like people to find you? How can they find
Twitter.
you?
I mean, under my name on Twitter. I make a lot of noise. You can ignore some of it. At EMA2, EdwardMarkAlpha2.com is my firm's website, and we write a quarterly macro letter. My partner, David Foley, who's excellent, writes that letter with me.
Repeat the URL one more time for that, please.
Yeah, EMA, EdwardMarkAlpha2, www.ema2.com.
The number 2?
Yeah, the number 2. Yeah, I'm an advisor to the Bitcoin Opportunity Fund, which is David Foley, James Lavish, Mark Moss, Greg Foss, myself. And so you can Google that. And, I'm going to, I go to a fair number of shows. I'm going to the New Orleans Gold Show, which is in later in November. And then I'm going to actually go to Bitcoin Mina over in Abu Dhabi in December. Cool. So if anybody's at any of those shows, please come up and say hello. I'm happy to talk to everybody I can. Sadly, I can't respond to every single DM I'm getting. It's kind of getting crazy, Tom. It's a
testament to the value you're bringing. It's a testament to the value.
Look, if I haven't responded to something, please don't be offended. I'm really heads down on trying to get this book done. So, that's what I'm doing right now.
Larry, keep going, man. You're serving all of us. Thank you for this.
Thanks.
Thank you.
I appreciate it, Tom. I'm happy to come back anytime. And I don't know, do you know what's going on with Canada this year? Are we doing another Bitcoin Canada, or do you know what's going on?
I haven't heard. I assume we are. Okay. Yeah, I don't know. I
assume we are. And if we are, we make sure I know about it. I'm sure they'll make sure I know about it, but I'll see if there was a lot of fun seeing you in Toronto, and last year was Montreal. I don't know where they do it. Maybe they'll do Ottawa, one of them.
I think it's going back to Montreal. I think it's back in Montreal.
Is it? Okay. Yeah. Good. All right. Well,
thanks,
anyway,
Larry.
Always good to see all you guys.
Yeah. Thanks.
Thanks.